Today, we're diving into a massive trend that could reshape the stock market in 2025. The reshoring boom. Companies are bringing manufacturing back to the US, and it's creating a goldmine of investment opportunities. Think robotics, automation, and good old American steel. In this video, I'll break down why this is happening, which stocks could skyrocket, and how you can cash in. Stick around to the end for my top pick, and don't forget to smash that like button and subscribe if you're ready to level up your investing game. Let's get into it. So, what's reshoring? It's simple. After years of outsourcing manufacturing to places like China, companies are now moving production back to the US. Why? Supply chain chaos from the pandemic, rising shipping costs, and geopolitical tensions like trade wars are making overseas production a headache. Plus, the government's throwing in tax breaks and incentives to bring jobs home. Just last month, I read a report saying US manufacturing could add $1 trillion to the economy by 2030 if this keeps up. That's huge. And for investors, it's a signal. Wherever factories pop up, money follows. This isn't just a feel-good story, it's a profit play. Okay, so why is 2025 the year for this? 3 big reasons. First, tech's making it cheaper to build here, think robots and 3D printers cutting labor costs. Second, consumers are demanding Made in America. It's a branding win. Third, policies aligning. Biden's infrastructure bill and potential Trump-era tariffs in the future are pushing companies to act fast. I've been digging into news, and the buzz is real. CEOs are announcing factory openings left and right. Take Tesla, they're expanding US plants like crazy. This isn't a maybe, it's happening now, and the market's waking up to it. Let's talk stocks. Here's where the action is. First up, robotics and automation. Companies like Rockwell Automation are killing it, supplying tech for smart factories. Their stock's been steady, but I see 20 to 30% upside if reshoring accelerates. Next, 3D printing. Look at Desktop Metal. They're small cap, risky, but if they land big contracts, it's moonshot territory. Then there's Steel. Nucor is my sleeper hit. They're cash rich, pay a dividend, and every new factory needs steel. I ran the numbers. If US steel demand jumps 10%, Nucor could see a $10 pop easy. These aren't meme stocks, they're fundamentals meeting momentum. Now, no investment's perfect. Risks? If global tensions ease, some firms might stick overseas. Automation could also cut jobs, sparking backlash. But the rewards outweigh that. Analysts at Goldman say industrial stocks could outpace the S&P by 15% in the next 2 years. This is a long-term trend with short-term pops, perfect for traders and hodlers alike. Just don't YOLO your life savings without doing your homework and consulting your financial advisor. So, my top pick? Nucor. It's got stability, growth, and a dividend rare combo. But I want to hear from you. Which stock are you eyeing? Drop it in the comments. If you love this dive, hit that like button, subscribe, and ring the bell. We're dropping more stock market gold every week. Next up, I'm tackling AI 2.0 big bets, so don't miss it. Thanks for watching, and I'll see you in the next one.